And Tom, you've got some good picks in here today, okay? I want to make sure.
Ones.
Yeah, I want to make sure that goes on record. You've got good picks in here today.
Wait, are you saying that I usually don't?
No, just today's are particularly good.
Yeah.
All right, so Tom, let's talk Live Nation actually first, because that's the one that was on my radar at the top of the show. The chart, super interesting in Live Nation. Epicenter reopening trade.
Yep.
It's on the fringe of a breakout or a breakdown or reversal, something.
Maybe. Just hit all-time highs on Monday. I mean, think about this.
But then it's faded.
Yeah, it's faded a little bit, right? But think about this. Concerts were shut down for over a year, right? They're just starting to come back. They took on a lot of debt during COVID, right? Just like the airlines did, just like the cruise lines did. They were issuing shares all over the place to kind of sustain their business. But they've had a lot of competitors kind of peel off a little bit. So everybody expects concerts to be full and in full force. I haven't seen it yet. I'm a concert goer, and I just haven't seen it yet. There's concerts, but not like there was in 2019. But it's pretty surprising, this stock, with the optimism going to all-time highs earlier this week. Pulled back, as you mentioned. They've done some takeovers, some M&A activity, which has helped them a little bit. But this one, the trade that kind of stuck out to me today as far as unusual option activity was all the way out in April, the April series. So about 197 days till expiration. They were buying upside calls above that all-time high. The 100-strike call, bought 5,000 of those for $8.50 average debit on these calls. That takes that break even to 108.50 over the next nearly 200 days. That's about 18% above the current share price, would be a new all-time high. They're giving themselves duration. Call volume is about double normal daily average volume. And that 5,000 lot that they bought on that strike is about half the daily volume. So only 10,000 calls overall in every option series have traded. 5,000 of them in that April one. So giving themselves a lot of time with the expectations that, hey, this stock's going to continue to chug higher, because, as you mentioned, that chart's pretty interesting, considering that that concerts and events aren't at full capacity yet, or the amount of events taking place isn't back to 2019 levels.
So someone here, though, is betting on a sizable move. I mean, this would be a real breakout. The reason I hesitate to call it a breakout is because we're still basically at the same spot that we were at multiple times this year on kind of false breakout periods. So if we do then really clear this hurdle, this trader still got another 8 bucks.
18%.
Yeah, whew. Yeah. Big bet here.
Yeah, it is. But I think the key with this, what this trader's thinking is going out to April, right? Mm-hmm. So he's giving himself a lot of duration. He's paying a pretty big option premium for this, $8.50 for a call that's so far out of the money already. So you're paying for that duration with the expectations, hey, this stock's up 25% so far this year. Maybe it's got another 25% in it.
Okay. All right. Let's go over to Dollar Tree. Yeah. Big news today. Big move as well. What's up?
It's up, 16% so far today. Down 6% on the year. All-time highs, about 120 bucks that we saw in April. But based on their new Dollar Tree Plus stores, they're going to have items for $1, $3, $5. So what does that do? Well, that increases the number of products that they can sell, but then also probably increases their margins, because I'm not thinking anybody's going in there just looking for dollar stuff anymore. With inflation taking place, Oliver, is there anything worth $1 anymore?
Right. It's the dollar plus other stuff that's more than a Dollar Tree.
Right, which will probably improve their margins and customer traffic. But because of this move today, we're seeing some real short-term call buyers in there in the October 1st weekly series. That 100-strike call, which basically at the money, they bought about 20,000 of those earlier on in the session. Average debit of only about $1.35, but you've only got 2 days in this trade. That break even of 101.35 to the upside, that's less than a 1% move, Oliver. So you got 2 days. If this rally extends, we'll probably see some analyst calls on it. We've already seen a few of them. Pretty positive on the news of redoing their business a little bit. Call volumes only about 82,000 across the board in every call series. But that's 24 times normal daily average volume that we've seen over the last week in Dollar Tree. So big pops, got the speculators coming out in here in the short term, thinking this stock's going to continue to rally into the end of the week.
Okay. All right, bullish. Dollar Tree looking to chase these gains higher. Last one you've got, what are you looking at here?
Vale.
Oil?
No,
miner.
World's biggest miner of nickel, and they're in iron ore also. And they just had to rescue some of their workers in one of their mines in Canada. That went smoothly, thank goodness. But shares are up about 2% today, but down 26% this month alone. But it did hit 9-year highs of 23.18 in June. Morgan Stanley downgraded the stock today, put an equal weight from overweight and an $18 price target. And they're still posting solid free cash flow. They've got demand that's happening across the board in all their products.
Okay. Stock's been peeling off, though.
Yep.
But so has the overall Brazilian market. EWZ ETF is down like 25% off the highs.
Right. And this is a Brazilian-based ADR, so you have to remember that. But they were in there buying calls on this downgrade today, which is surprising. Stock's up on a downgrade, right? Maybe commodity space doing well. Demand's still there. But somebody bought 5,000 of the October 15 strike calls for a really inexpensive debit of only 27 cents. That takes that break even at 15.27 over the next 16 days. So only about a 2-week trade. That break even is about 8.5% above the current share price of Vale. So somebody expecting this downgrade is going to get pushed aside and maybe over the next couple of weeks start going back to those June highs that we saw above 23 bucks a share. That would be stretch because that break even on this trade still 8.5% above the current share price.